going to do something a little different this week. We're going to go over the earnings, which we don't have much. We're going to go over the economy data, which we do have quite a bit. And then I want to do a video and just go over the sectors. We'll do a second video with the watch list. This week we just have Oracle on Monday and Adobe on Thursday. Not a lot going on there as expected. Earnings are slowing down. Now, as for our calendar, we have CPI Tuesday, PPI Wednesday, retail sales Thursday, consumer sentiment Friday. We also have petroleum report, and I do want to keep an eye on energy this week, crude and oil data. So there's some data coming out there. As for the Fed speakers, as I mentioned several times last week, that last week would be our last time hearing from them until the 21st, when we will have Powell and a decision. So let's go to the charts. All right, so in this list we have our sectors and daily, weekly, and this one S&P chart, or SPY chart, I'm sorry, this one SPY chart here. And the SPY chart is just a chart I keep in here with the fib levels on it. I do want to point out that we are right into our 38%, and that can act as resistance. Your MACD is trying to cross. We'll talk more about the market itself in the next video. I just want to touch on the sectors. So we're going to look at the daily first of all the sectors, then we'll look at the weekly. It's just the way it's laid out, not my choice. I'd rather look at each one daily and then look at the weekly, but it's the way stock charts lays it out. So you have the communication sector getting kind of and we're going to see this, it looks rounded bottomish, but this is actually called a descending scallop, and just like any pattern, it can break either way. XLY discretionary. This one we have a rounded bottom pushing up. You're back above your 20 here, your 9, your 50, your 20. The 200 is up here, and you can see we've touched the 200 once already and seen rejection there. MACD's trying to cross here. So if we do continue to push, watch your 200 there. Keep in mind discretionary things like Tesla. And it's just weird to be seeing discretionary outperforming things like Colgate, toothpaste and stuff like that. So consumer staples, which this is where your Colgate is. So if you look how much healthier this chart looks versus right back to the scallop. And once again, the scallop can break either way. A lot of times they actually break down. To be honest, it just pushes up into previous resistance and then fails. And a lot of times that's what we get out of a scallop. But we're going to monitor it, watch it either way. If the market's going to continue to push, we will continue to trade bullish. When the market pulls back, the trend's our friend, we'll trade bearish. This is why we trade like we do. We take advantage of daily opportunities. The market offers many daily opportunities. I don't see the reason to sit into to choose a different option to sit into a stock all week or an asset all week to try to get 100% when you can possibly get it in a day or get several smaller trades on that asset. So you can see here, we're trying to push up into the 200 and the 50 right now is resistance in consumer staples. Energy, we talk about energy a lot. I still think energy is worth keeping an eye on. Financials, once again, you can see the upside down J here. This is a descending scallop, and we are back above our 20 there. 200 would act as resistance if we push up that high. MACD is trying to cross. I don't know how much gas we're going to have in the tank before pulling back. I'll talk more about the market in the next video. So you have healthcare, you got a little rounded bottom down here. MACD is actually crossing, seeing some green in the histogram. We watch healthcare a lot. There's a lot of names I call out, like LABU, just a lot of names that we watch, and BNY is definitely on the radar this week. XLI, industrials. Once again, descending scallop coming in here, and it's basically a rounded bottom. I look at it as an upside down J. So it's a lot like a rounded bottom, but it doesn't have the actual curvature. It's more of a faster, swift move. And a lot of times, like I say, a lot of times you'll come up here and like hit the 200. And so this will be a low. You'll come up, put in a high, and then you come back down to put in a lower low. A lot of times that's what happens, but there's no guarantee in that. And that's Thomas Bukowski. XLB, inverted scallop right into your 20. MACD's trying to cross there. So this is real estate. See, this one is definitely more of a rounded bottom. Can you spot the difference? Now that you can look at both of them, you can definitely see a difference into it. Here we have retooken this 50. Coming up to this 20's resistance. MACD's looking like it possibly wants to cross. XLK, once again, you have the descending scallop there. MACD is not as healthy. Technology is not as healthy as some of these others, as you can see. Like utilities, this is utilities daily. Big strong move here, which if you remember back in the end of June, we were calling for utilities, and since then utilities has been the #1 performing sector. So we were, just recommending if you're more of an investor type stock, or you can watch that, but if you're more of an investor, that there was opportunities there. XLB, this is XLB's weekly, and you can see low, low. So you can see we're kind of going into a downtrend here. Nice candle last week. We took the 9 back, trying to test the 20. Not quite made it to the 20. MACD is not showing us a whole lot of momentum there on the weekly chart. Either way, good or bad. Weekly communications. This looks like we're trying to get a pinch here, but overall you can see the downtrend, a push up, tested the Bollinger Band, and usually we can see a pinch here, so we know a move's coming. So we could just be pushing up to retest a mean, which is your 20, and move down, or we could take that out and push up. So that's what that's the big area to watch on the weekly chart with communication right now, is watch your 9 and your 20 MAs. If we can take that 20 out, look for a move up. If we test a 20, see what happens, possibly going to see a move down. You can see energy here. Now this is energy to weekly, and you can see a fairly nice chart. We called this very well this year. It's just been on a tear. And we've called moves on this since the beginning of the year, obviously. But you can see we tested resistance here and has been pushing back up. But it's not been a clean move for energy. Just so much FUD going on in the world. XLF weekly again, coming down here, putting in a rounded bottom down here. Actually, if you look at it this way, I didn't draw this out. You got a cup, handle. So you actually got a bear flag. You took your moving averages back, your 9 and 20 back there on your weekly 9 and 20, your MACD's pinching. But you can look at this as a cup and a handle. And like I say, we have retooken the moving averages there. So watch the banks this week. We could possibly go for a move up. Industrials, put in this little rounded bottom, come up, flag back down, trying to retake those to see where we open up tomorrow. Retaking those moving averages. This is technology weekly chart, and you can see it's in a downtrend. You can see the lower lows. We did push up and test this 50. Now since then we've pulled back down below our moving averages. Last week we pushed up and tested. Remember, technology is not as strong as the rest of these sectors. This is consumer staples. On the weekly, you can almost see, 3 rounded tops there. Kind of looks like a neckline's not perfect, but kind of looks like a head and shoulders pattern there on consumer staples. And this is what's weird, because this is the things people need, and we're seeing this consumer discretionary outperform consumer staples. And, that's just not the way it really should be with a recession. People worried about a recession. You can see real estate here has been into a downtrend. We've been expecting more downside on real estate than what we've gotten, honestly, just due to the housing issues that's going on. XLU weekly, and you can see it's just been on a tear since we called it out in June, and like I say, it has been basically the #1 performing sector since we called it out. But at that time, let's be honest, tech was moving. Tech is the place. It's a lot easier to move in and out of with options with tech than what it is with utilities. So we've been riding the tech train, to be honest. But like I say, our videos are for everybody. We try to include something for everybody. And for investors, if you would have moved your money to utilities at that time, you would have done very well. XLV, you got healthcare. Just been kind of trading pretty flat right in here. Like we were on this nice tear, going up, seeing higher highs. And, you know, the last couple months we have been cooling off. So like when the rest of the market was pulling back, you know, in April, the rest of the market was already taking a beating. Healthcare was still continuing to push. But since then, it's just been kind of chopping around with the rest of the market. Now you're getting a real clear direction there either way. And consumer discretionary on the weekly. So you can see on the weekly we did pull back. But this last week we have been very strong. A lot of that could be with Tesla. And this is back to SPY. So this concludes our video for today. That's all the charts. Like I say, I have another video I want to do going over the watch list, and I will talk more about my feelings on the market and what to expect, what I believe to expect, that we should be expecting in this market. Have a great day, everyone.